How important is LMI at the moment, and I guess being impacted by the macroprudential measures which came in from APRA, and then obviously we saw the banks sort of like pulling out of the high LVR lens. That's something which has been happening or has already happened. Is it still having much of an impact?
The story's been playing out over the past 2 years as we've seen our customers respond to APRA and also market conditions to start reduce the high LTV, and then of course we've had the 10% growth limit put on investor. So that's had an impact on our business in both a good way and a bad way. So the bad or the more challenging way is business volumes have reduced on the basis that we are there to support our customers, and if our customers are not writing the business, then we won't write the business. But the plus side is that the quality of business that's being written is far superior to what we've seen in prior years. So we think that is a good outcome overall. Now, where do we think it's going? There is some statistics I would say that some of the banks have actually overshot those prudential limits and are now will come back to a more normal and sustainable level. Picking the time at which that will happen is always challenging, but we're certainly expecting to see some increase in our volumes moving into 2017 and certainly into 2018.
Just finally, I wanted to ask a bit about housing affordability. It's something which always comes up time and time again. It's an interesting debate, depending on which side of the table you're sitting on. But how important is LMI for housing affordability for first home buyers, for example, and what potential, I guess, measures could be implemented to make housing more affordable for younger Australians, for first home buyers, those looking to enter the market?
Housing affordability, you're right, the perennial challenge for Australians wanting to enter the housing market. I think LMI is critical for anybody who doesn't have the deposit but does have the ability to service their mortgage. LMI is a way for them to get into the property market a lot earlier. So getting into the property market earlier is pretty key, especially if you're seeing in rising house prices. We are forecasting house prices though to remain relatively flat and units to actually come off. So that should be good for housing affordability. And if we stay in a low interest rate environment, again, fantastic. The challenge is getting on the housing ladder, and again, that's where LMI does assist. We're looking at ways in which we can try and help first home buyers beyond what we currently do today. And again, some policy changes we've made in the last year in terms of reducing some of our genuine savings requirements and also allowing people who have been paying rental over long periods to have that rental taken into account when applying for mortgage insurance, hopefully will also help with housing affordability. But the key part of this is really the other side of the equation. House prices are still the challenging part. So until we actually address the supply and demand imbalances and have more stock and cheaper units available, some of the Australian population will not be able to buy the house that they want. Now, again, that's an interesting question. So everybody probably would like to have the Australian dream of that freestanding house with the pool. The question is that realistic in today's markets? And people may have to look at buying further out and downsizing to what they ideally would like to at least get their foot on the ladder, and then probably, like most of us have done, work their way up over the years to what their ideal property would be.
In terms of housing affordability, I know it's something which is always on the radar and always being talked about. One question I wanted to ask was, how important is LMI to housing affordability, and what new measures or new things do you think could be adopted to increase housing affordability in Australia?
So LMI is critical for anybody to enter the housing market who doesn't have a deposit. So unless you have a 20% deposit, you can actually go and buy mortgage insurance instead with probably as little as a 5% mortgage. Now, for many people, they can service the loan, but the time it would take them to save the deposit actually is prohibitive. And if you look historically over the price growth of houses, it's been outstripping people's ability to save the deposit. So with mortgage insurance, it allows you to reduce the time for those people that can service the mortgage themselves. The challenge with housing affordability isn't just obviously having the mortgage, it's also being able to find a property that is affordable for you. And I think we all would love to see people be able to buy that freestanding house with the pool, but that may not be realistic for most Australians today. And whether you're looking at high density or moving out to some of the regional locations, they would have to be viable options for people to look at if they're wanting to enter the housing market sooner rather than later.
Just before I let you go, I wanted to ask about the foreign investor angle. It's debatable, how much foreign investment has led to increases in the house price. But I guess maybe a bigger question is what impact foreign investors are having on housing in Australia?
The foreign investors, we touch on that a little bit in the housing outlook, but we have done some additional work post the report to explore that in more detail. Interestingly, if we look at the FIRB data, we actually estimate that most of the foreign investment has actually been in new properties rather than existing. The number of foreign investors buying existing we think could be as little as 3% of the overall market. But when you actually look at the FIRB numbers, there are many units that are getting approved where the whole development is approved for foreign investment. Depending on whether all or none or somewhere in between are sold would depend on actually what level of influence foreign investors are having. But when we crunched the numbers, we found it was somewhere between 10 and 26% of all new dwellings are being sold to foreign investors. Now, with the tightening of policy, the additional stamp duty for foreign investors, and the high rate of interest for those foreign investors, the intentions of those measures has been to lower the number of foreign investors that are entering this market. Now, naturally, if you're going to do that, if those are going to have effect, somewhere between 10 and 26% of buyers of new properties are going to leave this market. That has to have an effect on that supply and demand, and that's where we're certainly forecasting that there will be a weakening in unit prices in the inner cities of the Sydney, Melbourne, also possibly the Brisbane and Perth markets, which would have been the target market for many foreign investors.
Phil White, thanks very much.
Thank you.